welcome back to our Sundays watch list. All right. So we're gonna see what is moving the market, where we can make some money, where we can find some plays. And also I'm gonna give you a few tips and tricks that also that can help you go fish for yourself in the future. All right. So the number one thing I'm gonna show you all is the SPY, which is also known as the S&P 500. So as you start trading and get used to trading, this is something you want to pay attention to, and you always want to just go in and put in SPY and your ticker symbol up here at the top. And we want to see what's going on in the market each and every day, hour by hour. And that's something you want to pay attention to. So if we see the SPY has been on a strong uptrend, we haven't seen too many down days. We've seen a couple days that's been down or consolidating. But on the most part, the last few days in the market has been positive. We've been on the uptrend, and we have been all green as well. You can see we have seen plenty of bullish volume at the bottom, and that is something that is good for the market. But also, as we have seen these peaks, and then we see drops. We see pretty much a peak right around here as well, and we see a drop. So all these run-ups are followed lately by drops. So I would not be surprised we see this peak, and then we see it mellow out to about 399, right at 400. So as we know, whenever we see the market peak and drop, and when it makes these drops, guess what? The market, most stocks are going to fall. So this is our mood meter. This is how we can pay attention to what's going on in the market. Also, another one that you want to pay attention to is the bond yields, TLT, the 20-year treasury bond yields. Okay. So this is also something that you can pay attention to, get a quite a little bit of idea of what direction the market is going, where is people putting their money at, right? So as we see that the market has been very bullish, I have a little play right here to be prepared for those little red days. All right. So we have these red days, and I'm thinking Datadog has made a nice move up with the market. We should see the same thing that we see with the market when we had the SPY, and it had nice move up, and it also had a little gap where it went from 85 and then gapped up all the way to 86. A nice little dollar move. But at the same time, I will pay attention and noticing the volume has been bullish, but if we see a red day, I can see it dropping below this 200-day moving average and coming down to fill this gap. Now if it's just a consolidating day, it might hit this gap real quick. But if it's a nice red day, I will see it come down and touch this other support level that they have created at the 82, 83 level. So this can possibly be a $2 to $4 move, depending on what we see on the SPY, right? So this is something we need to pay attention to, understand where the SPY is going to give us, and we got to take what the market gives us. Do not go looking for and try to take and get what the market, what you want out of it, all right? So the next thing we're going to have is something that may be another pullback that can be a potential win for us, is Kroger's, all right? So we're looking for this pullback pack. It's been doing opposite of what the market been doing lately, but it has been dropping. All right. So I think this is going to be low, 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 low on our RSI. I think it's on the verge of being oversold. But if we can get a red day, it may bounce at the bottom of this channel that has created a slight channel right here. It may bounce off the bottom of this channel, but if the market pulls it back a little more, I can see it bouncing off of this 200-day moving average. I would love to see this 200-day moving average get a bounce off of this and make its way back up. And when I see the bounce happening, I will set my alert in two different areas. I'll set my alert right above the 200-day moving average, and I will also set my alert right around here before the end of this channel. Right, let's say about right here. All right. So these are the two levels that I'm looking for Kroger, which can have a potential pullback if we see little red days in the market. We also see this bearish volume at the bottom, so we know it's going to be potentially coming down, but we want to see that bounce make its way back up, and we'll get this for long term. We'll get this for at least about 3 weeks out, so that way we can go ahead and not get too much time decay, and also we can ride this thing right on back up, take our profits, and then we're good. All right. The next one that I have, and we're talking about moving averages, is Hasbro. All right. So we have seen Hasbro before. This was on our watch list a couple weeks ago. And I want to say I alerted Hasbro right around here. Matter of fact, the 16th, 17th, it was right around this area where I alerted it. And you see the bounce where it came up. All right. So we rode this bounce from 93 up to 97. And I can see the same exact bounce happening again from about 95. And I can see about a $3 bounce out of this. All right. So if we can get a nice bounce, we see some bullish volume at the end of the day. So we can get that bounce, and you see that bounce start to move. And this is something where I'm trying to always tell you all to pay attention to is this moving average. All right. We have our 9-day moving average. And when you pay attention to this moving average, you can catch a few plays. And as you see, when it bounces, we can catch it above this moving average. It'll be favorable for us. So we catch this bounce, got some volume, make our way back up, and it might horseshoe underneath as we see right here. We might see something identical to this. So make sure you pay attention with your stop losses and understand if it horseshoe back around, it may not just be a drop. It may just be just a slight pullback, and then you can catch it back up. So I love Hasbro as well. And then as we going up for Twitter, Twitter will be my next play on our watch list, and it's something that I think has been pulled back, it's been pulled down, and we're approaching that 200-day moving average. I enjoy playing gaps, I enjoy playing 200-day moving averages, and I see that it has found a level of support it's been bouncing off of, so we can get a little bullish power on there. And if we happen to have a green day tomorrow, I can see this potentially running up to about 66. So I can see a $3 move. I don't know if it'll have enough power to break above that 200-day moving average, but I certainly know that if we do have a green day tomorrow, this should be nice bounce off of this moving average because it has respected this level. But also, if you see this thick white line right here, that is our moving average, our 26-day moving average. And it's gonna go ahead and look like it's been resting and respecting that 26-day moving average. So we've seen it touch once, two, three, four, five. It's his sixth time touching that. So one or two things we may see. We may see it break through and come back up, or we may see a nice little bounce and work its way back up to these levels at 66. So it could be a nice $3 to $4 move. And also, if we have a good green day in the market, we may see it break this 200-day moving average and get above there and see some good positive moves out of Twitter. All right. So that is our watch list for this.